Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some altcoins today. Not much has changed week over week. A few things improving, a few things not. I can't skip over the election stuff. Very personal for people here, very hot button issue. But if your viewpoint is Harris will likely be more of the same, hostile towards crypto on a regulatory front, you got to keep that in mind if you're trading alts, especially in a big way, because this event is coming up. Whether or not we actually see that throughout her presidency, should that come to fruition or not, is less important, at least than the initial win or loss of the election. Trump clearly viewed as the crypto candidate, Harris not as much. We also have the uninversion of the yield curve on the 10-2 side of things, which is mainly what people pay attention to. Not great at timing the exact day of the recessions. This can be delayed significantly, as you can see here in the highlighted regions. But yes, historically, it is a good indication that a recession is around the corner. Unemployment tick down, rates will tick down here. And you also have to ask yourself, who is buying altcoins here? Are the people getting paid interest on their cash? Are they buying altcoins? Historically, have they bought altcoins? Or are the people maxing out credit cards, unable to pay student loans, unable to pay their mortgage, their car payment? Are those the type of people who generally venture into altcoins? A good question to ask. So although the 10-2 is uninverting, the 10-3 remains deeply, deeply inverted. This is also not a good indicator for determining exactly when a recession will occur. You can see it's delayed by months here. But collectively, between the 10-3 and the 10-2, it's something to keep in mind because alts aren't probably recession proof. Should we have a recession? So we've got a big binary bet on the election. We've got a decent likelihood eventually of a recession. And yes, liquidity is rising. US liquidity, not so much on the white here. US liquidity, probably the most important of any country in the world. That has yet to jump higher. We'll see what Powell says next week about QT versus QE. At least since March, crypto prices have followed US liquidity in that US liquidity has come off by quite a bit, as has crypto, right? So despite S&P going higher, Q's going higher, other risk metrics doing better, liquidity moving higher, stablecoin market cap moving higher, crypto hasn't quite gotten the message just yet, probably because it's waiting for US liquidity. We can look at other stuff as far as what's going on right now for alts specifically. Is this risk on mode or risk off mode? We can look at volatility, the volatility index, the VIX. We aren't exactly a direct correlation of volatility, but risk markets benefit greatly from volatility declining. So what we don't want to see on the crypto side is random spikes in volatility for whatever reason. The good news is the UJ carry trade mini implosion so far has been self-contained. That'll continue to potentially have temper tantrums as the rate differential shifts. But even this recent jump in the VIX has started to get crushed. And that's what you want to see if you're honest about crypto. It's silly to be long BTC or alts and expecting some big down move in legacy markets because those two viewpoints are not congruent. The same thing with bonds. The MOVE index is bond volatility, US bond volatility. We are typically, historically, inversely correlated to bond volatility. So what do we want to see? We want to see bond volatility go down every day, every week, until it's to zero. BTC benefits, alts benefit from that. You can just see historically. You can see COVID, you can see SVB, I think that's what this was. You can see 2015 to 2018, what that looked like. Even as far back as 2012, this correlation held true, and that's mainly because more bond volatility equals less liquidity, less bond volatility, more liquidity, generally. So this is headed in the right direction. The VIX, although it spiked recently, headed in the right direction. We can look at junk bonds, which are the altcoins of the bond world, high yield corporate bonds. These are also moving up and to the right. We are correlated with that. This is risk. This represents risk markets. We typically don't move one-to-one with HYG, which is the ticker for this. It's usually delayed slightly. You can see HYG typically moves first, which is what we're seeing here. It's moving off the lows, although arguably this cycle BTC did move first, probably because of the ETFs, but HYG continues to hold highs, and the altcoins of the bond market are continued to be bought, not sold, and that risk on appetite in junk bonds remains, which wouldn't be the case. You wouldn't expect to see that anyway if there were major concerns about recessions. We can even look at, if you want to go deeper, we're just peeling back that onion today, looking at anything that's not an alt chart, because alts, again, not much is really happening, but looking at the spread of high yield debt, high yield bonds, similar to the VIX, similar to the MOVE index, it's a volatility index of its own. We're not seeing the warning bells for extreme spreads here, growing spreads here. So nothing in the altcoin land of bonds looks recessionary here, other than the uninversion of the curve on the 10-2, but the 10-3 again remains deeply inverted. So we either have a recession or we don't, and then we either have a reaction off of that in crypto or not, right? But currently where we sit, the risk side of the equation is looking constructive for higher highs here in legacy land. Now in crypto land, it's a bit different. This is total 2, and it's not just crushing lows here, although it is crushing lows. We are, I would argue, in some sort of falling wedge variant that we typically see. So this isn't bullish in and of itself, but it is bullish if this can break up, if this can break the cloud, if this can break the 200-day moving average, right? There are levels at which we can say, okay, we're getting more bullish, more bullish, more bullish. We're underneath everything. So eventually when this flips, the trade should be obvious. And again, stable's still rising here, and that's what we want to see. This is a bullish divergence. We are seeing liquidity get injected into the ecosystem. Whether or not that's hitting page 56 of CoinMarketCap or not is another question, but the liquidity is there at the very least, and it's not getting removed from the ecosystem that we can measure. Now, Bitcoin dominance continues to move higher, and again, it's simple. It should be the most obvious trade in your life. When dominance drops below a high time frame cloud, when Bitcoin dominance trends lower like it did in 2021, then everybody should know what to do. And that environment favors alts over BTC. That is not the environment we've been in. This is everybody just wishing for years that alts are going to go up, and they haven't. It is harder for alts to do better against BTC when BTC was a much smaller part of the market. But as this pendulum swings and this yin yang goes from BTC uber turbo strength, at least based on these metrics, to BTC weakness, we need to see the strength in BTC first, and then you get stuff like this in 2021, right? Where that money can move to alts. But right now, BTC is hoovering up all of the strength. And again, speaking of like the easiest trade in your life, we're looking at this, it is obvious. It has not been wishy-washy. It has not been, oh man, ho-hum, I don't know, what do I do here? This has been clearly bearish for years. This has not been anything like 2019 through 2021. This has not been consolidating. This has been going lower month over month, year over year, and it continues to do so. If at any point in the next 3 to 6 months, we are holding sideways at all, then things can get a little bit more exciting. But there was no expectation for random magic beans to sprout and a beanstalk of candles to all of a sudden pop out of this chart. That is not the expectation here whatsoever. The expectation is dominance will keep dominating, alts will keep dwindling against BTC, and nowhere is that more obvious than ETH. ETH BTC continues to go lower, and I just don't know what to tell people. That's been the obvious path ever since it broke below the weekly cloud, broke below 050 psychological level, 2022 low, and the ETFs didn't help. Continues to make weekly lower lows. What else is there to say? There's a level at 036, but we'll see. It's not like you're going to randomly miss some trade if you don't catch all of the knives all the way down to wherever this is ending up. That's not how this works. You can wait. You can give it the benefit of the doubt that it's probably going to be weak. It's probably not going to do much of anything. And you want to start to see some volatility in a sideways range first. We're just having downward volatility. This is just straight down. And we could say, well, maybe this is a falling wedge. Maybe this is something else. There's probably a bull div on this at this point. But the trend is obvious and clear. It is not bullish whatsoever. I got to throw in the watch market plug just because I think it's hilarious. I'm not a watch person, so let this burn. But when we're talking about speculative money and gobs of money that's floating around, this continues to look bearish. So this is basically alt BTC, right? This is not suggestive of plenty of money floating around to buy up speculative stuff like it did post-COVID. Then as far as BTC, we're still in this range. It's a tight range. It's a downward range. It's bearish. Until we break above or below, I wouldn't expect alts to do much of anything. It's September. We don't typically do much of anything on BTC until Q4. Alts tend to do better after BTC does better. This measures to 100 plus if we break the highs at 65, at 70. So there's this massive if this then that decision tree that we're still very much inside of, and we have not determined which branch we are going down. We've got the election, we've got rates, we've got recession stuff, and there's still a lot of uncertainty. Before we talk about individual alt names, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Pair Adventures Inc., PBI, DBA, Kraken. Looking at the list, they did update these categories a bit, so that's nice. Ecosystems also updated in case you care more about Sol versus ETH or BTC or something like that. Volume-wise today, stables at the top. Even in the top 10, there's a lot of Forex, there's a lot of stable coins. Sol almost 2x the volume of ETH, BTC 3x the volume of Sol, and it just favors very little as we scroll down here. There's just not a lot going on the alt side of things. Chart-wise for ETH, it has certainly reached the target of the breakdown. Trend is still bearish, and I would watch for this potentially into late October, right? This probably won't move first. It'll move after everything else, aka BTC and Sol. You will see probably ETF flows pick up when this starts to move. And again, that's going to be obvious because ETF flows right now are zero. It's not like they're randomly hot or not. They're just not hot at all. No one cares about ETH. So ETH looks better above the neckline here, which is 28. It looks better above 29. It looks better above 3,000. But here there's not much of anything going on. And that's just it. That's all she wrote. Pretty simple, black and white. Sol as well, it is still dealing with will she or won't she effectively break down or not. We can look at the other stuff, MSTR, Coin, CleanSpark. There was another one I saw the other day. I guess SMCI is an extreme case of this where that already did break down. But I wouldn't expect much of anything until we're back above 190, honestly. 165 is a great first step on Sol, but it's not like it's screaming anything here. It's not like, oh man, this looks like a great long. I can't wait to be long. No, not at all. FET, high in the volume today, so you're welcome if you're long FET. But I keep talking about this because it's one of the better looking setups out there. It's in the daily cloud. It's got a bullish TK cross. It has the inverted head and shoulders pattern. I just don't know if the general environment is there for this to actually play out, but it's something to do if you're looking for a trade. That does exist. Doge still kind of in this sickle downward falling wedge. Not quite looking ready. Not yet, but it's getting there. You know, a lot of this stuff, again, there's going to be a video in Q4, most likely, no matter who wins the election, you get a bullish Kumo breakout, you get a bullish Kumo breakout, and you get a bullish, right? All these alts are going to look really, really good. If we want to be crazy with Doge, take the high, take the low, we'll be conservative with it. We'll take the low there. We could see Doge 50 cents. Wild. Now, I said something similar to this back here. I said, you're going to wake up one day and Doge is going to be 13 cents. And a bunch of people let me know that that wasn't possible. Well, that happened. I'm not pulling these charts out of nowhere. I'm looking at the range, projecting it higher using fibs. So just as we found a bottom and bounced previously, I mean, that's not out of the question here. It's just a matter of timing. And it does look like it's going to need probably weeks, not months, to make a decision there. Aave, there's a lot of love last week for Aave. Let's see, this week, is there any love for Aave? It is moving up slowly. It does have a decent level that it's reclaiming. I just, again, don't know broadly if now's the time for this. Interestingly enough, back in the doldrums of 2023, Maker was another coin that was sort of going the opposite way. It was doing much better than everything else. Chart looked similar. It had this breakout, held above the cloud. It's not done so well recently, but I'm half wondering if Aave is effectively the Maker of current market conditions. You know, Maker did very, very well into 2024 when a lot of stuff did not do well at all. Say on the daily, we'll go back to this, unlike Total 2, unlike ETH, unlike many, many other things, at the very least, this has held sideways for a few months. You can see there's a potential triple bottom here. It's trying to consolidate. It's trying to get back into the cloud. Not quite above the daily cloud yet, but this is the type of chart I would want to trade over ETH, over ETH BTC, over Sol even, just because it has been so obviously bearish since April, since March. No doubt about it. That when this flips bullish, that's when I want to ride that train. But we're not quite there yet. We're not quite there yet. But it's definitely looking like it's closer to being ready than the high cap names. ICP is another one. Triple bottom, ascending triangle vibes, trying to get back in the cloud at the very least. And this is the thing you don't want to miss, right? It doesn't really matter what it is. Legacy, crypto, Forex, bonds. That's not the point. If you're a trend trader, sure, you need some fundamental argument at the very least. But the moment we can get back above the cloud with a bullish cloud, that's when I like to be on that side of the trade. Something else you'll notice with trend reversals is that there is typically a chart pattern preceding the reversal. So it's nice to see that here with ICP's case. I would set alerts for like 9-ish, 9:15. Any distinctive higher high above the cloud should be good enough for ICP. And this is a coin I know nothing about. I don't care about it. It sounds like junk, right? But if we're just talking trend, that is a chart worth thinking about. Ripple, much different, just ranging. Nothing going on here. Maybe Adam and Eve or double top. I would set alerts for 66 and forget about it. Not much going on there. FTM, similar to FET, inverted head and shoulders, pretty strong case there. Chart pattern wise, it's back in the daily cloud. I don't hate the setup. I don't hate taking all these setups low size. Stop losses could be halfway in between the shoulder, could be below the shoulder, below the cloud. Just depends on your risk tolerance. But those trades do exist. They are out there. Render, low time frame, not really much to talk about. I think they just listed that one last month. Pepe on the daily, also not quite much of anything, right? It's sort of making lower lows, sort of not, sort of ranging, sort of not. No pattern here that I can necessarily see, and below the cloud. So on a relative basis, FET, FTM look great. Say looks okay. Aave looks pretty good. ETH, meh. Sol, meh. Most everything else, just kind of meh. ADA, similar to Doge. Maybe falling wedge eventually, trying to bottom there, maybe inverted head and shoulders eventually. A little too early on that one though. AVAX, a lot of these layer ones are going to look very, very similar. They're highly correlated. Doesn't matter that the networks are different. They do not trade differently. AVAX in a downward channel. But again, there's a case to be made for something maybe eventually, potentially into Q4. And we saw similar patterns like this into Q4 last year. Now these were deeper and larger, but effectively similar. So definitely one to keep an eye on if you are an altcoin enjoyer. Tau, this one was just listed. Maybe triple bottom, something there. Really too early to tell. Whiff has had a few fake outs here, trying to triple bottom out here. But again, much like ETH and a lot of these other charts, I like it better above 2. I like it better above 257. And it just is going to take a minute to get back on the horse. Monero, kind of like Aave, it's quietly doing okay. I don't think there's necessarily a trade here just because Monero tends to not do much of anything. But if you're looking for a place to hide out in a risk-off sort of way, Monero has held its level for 2 years, 3 years at this point, and it hasn't really gone anywhere. You just have to be careful about headline risk, regulatory risk. Randomly, you'll see headlines about Monero that aren't too pleasant for Monero. Link, still ranging, still down, still kind of falling wedgy, just waiting. Not quite there yet. I like that better above 1360. We'll do a few more. INJ, same thing. A lot of these charts look very similar. Falling wedge, maybe triple bottom, maybe not. Falling channel, right? Once these start to make any higher high, then we can talk about being bullish. But we're still making lower lows. We're still hanging out at lows. Uni, not really doing much of anything. Back to this idea of crypto being the anti-Harris trade. DeFi probably looks a lot different if Harris gets into office. That's one thing to think about, whether or not you agree with that statement or not. I would just think about what may or may not happen to DeFi in the United States if Gary Gensler is the Secretary of Treasury. Same thing, just down. Not someplace you want to be until we get some strength there. Very much a downward channel. LTC, not doing much of anything. Mainly down, mainly making new lows. STX, this one was a darling for a while. Hasn't done too much recently. It has held the level though. Has a case to be made, like many coins, for a type of potential triple bottom. So none of these are particularly strong, but there's a case to be made that, hey, we're getting there. You know, if we say this is a channel, we're at the top of this channel, trying to break out, trying to break the cloud. So my guess is into October, again, this is going to be obvious. This is going to be extremely obvious. Now, we should see into October Total 2 potentially breaking up. I wouldn't expect Total 2 BTC to necessarily be breaking out into October, but Total 2 does have the chance to start looking a little bit better. So collectively, the table's still being set for alts. Alts need liquidity, they need dollar infusion, they need risk on sentiment. Some of that's there, some of that isn't. And they most importantly need uncertainty to be eliminated. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.